Ladies and gentlemen, good day, and welcome to the H2 FY26 results conference call of Gabion Technologies India Limited, hosted by Equibridge X Advisors Private Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Dhruvi from Equibridge X Advisors Private Limited. Thank you, and over to you, ma'am.
Welcome to the H2 FY26 earnings call of Gabion Technologies India Limited. From management team, we have with us Mr. Madhusudan Sarda, Chairman and Managing Director. The call will begin with opening remarks from the management, after which we will open the floor for Q&A. With that, I would now like to hand over the call to management for opening remarks. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone, and thank you for joining Gabion Technologies India Limited's FY26 earnings call. Especially warm welcome to all our investors, analysts, and stakeholders joining us today. And I take this opportunity to sincerely thank all our shareholders and stakeholders for their continued trust and support in our journey. Gabion Technologies India Limited continues to focus on delivering integrated engineering and geotechnical infrastructure solutions across roads, railways, water resources, energy, and other infrastructure sectors. Over the years, we have built strong capabilities across manufacturing, design, and EPC execution, enabling us to provide end-to-end customized solutions for complex infrastructure requirements. During FY26, we continued strengthening our operational capabilities, enhancing execution efficiencies, and expanding our presence across domestic and international markets. Our integrated business model, supported by in-house manufacturing, technical expertise, and EPC execution capabilities, has enabled us to consistently deliver cost-efficient and high-quality solutions across projects. Today, we have established a strong pan-India presence across 29 states, along with a manufacturing unit in Nepal. Our diversified product portfolio includes Gabions, slope drapery netting, geogrids, rockfall protection systems, 3D polymer mats, and various other geosynthetics. And these continue to support our long-term growth strategy. We have a high capacity utilization of around 80%, supported by more than 170 owned machineries and strong project execution capabilities, further strengthening our operational performance during the year. Coming to the financial performance, FY26 has been a steady and encouraging year for us across key financial parameters. For FY26, total income stood at 115.58 CR, registering a growth of 14.15% year-on-year. EBITDA for the year increased to 17.79 CR from 15.37 CR, reflecting a growth of 15.75%. Net profit grew to 8.11 crore compared to 6.19 crore in FY25, registering a strong growth of 31.04%. Our H2 FY26 performance was particularly encouraging. Total income for H2 FY26 stood at 74.87 CR as against 57.84 CR in H2 FY25, registering a growth of 29.44%. EBITDA increased to 11.91 crore, reflecting a strong growth of 72.09%, while EBITDA margins improved to 15.91%. Net profit for the half year stood at 5.69 CR, registering a strong growth of 62.53%. Net profit margins improved to 7.60%. Our integrated business model and diversified project exposure continued to support healthy operational performances during the year. We also witnessed increasing opportunities across infrastructure development, slope stabilization, erosion control, and geotechnical protection projects across India and international markets. Our current order book stood at approximately 200 crores, which provides strong revenue visibility for the coming periods and reflects continued customer confidence and repeat business momentum. Going forward, we remain focused on strengthening our executional capabilities, enhancing operational efficiencies, expanding our product portfolio and capitalizing on opportunities arising from increasing investments in infrastructure, transportation, water management, and energy sectors. We believe the long-term demand outlook for geotechnical and infrastructure solutions remains strong, and we are well positioned to participate in this growth opportunity. Before we begin the discussion, I would like to thank our employees, customers, business partners, and shareholders for their continued trust and support. With that, I now hand over the call for further discussion and questions and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to please use handsets while asking a question. Ladies and gentlemen, we will now wait for a moment while the question queue assembles. Our first question comes from the line of Nishita Shanklesha with Sapphire Capital. Please go ahead.
Yes. Hello. Thank you for taking my questions. I had a few questions. So, one is on the revenue growth. We've done of around 14% for the whole year. Earlier in the IPO call, you mentioned that we could grow at around 20-25% for the year FY26. So I just wanted to know what was the difficulty in achieving this 20-25% growth?
There is a work in progress in our project amounting to approximately 15 crore, which could not get billed during the financial year. So that revenue loss has resulted in this muted growth from our estimated 20% to around 15%.
Okay. So is this 15 crore also included in the current order book?
No, this is not included in the current order book.
Okay.
Yes, this is not included, well, because this is almost complete on the site, so we have not included it in the current order book.
Okay. Okay. Understood. And you earlier have also mentioned that in FY27 we can do a growth of 30-35%. Is that still achievable? Is that something we are still targeting? And if so, how are we going to achieve that growth?
We are targeting a turnover of 200 crore in FY27, which will translate into growth of approximately 40-45% over FY26 figures. This will be achieved because our manufacturing capacity is in the process of doubling. So our product sale, which is around 50 crore at the moment, will go up to 100 crore, which go around 100 crore in the coming financial in this year. And also our projects turnover will also increase similarly. So we are expecting a turnover of 200 crore in FY27.
Okay. Okay. Understood. And my next question would be on the order execution time. So this 200 crore of order book, what is the execution timeline for that? And how much of it can we do in FY27?
The current 200 crore is all to be completed within this financial year. Because the orders that we have in hand are either going at a good pace execution, or if they are new orders, then also the plan is to execute them at a fast pace and complete. So we are expecting the 200 crores. Yes.
So then we should have the top line of more than 200 crores, right? Because you mentioned that 200 crores, from that 100 crores will be from sales. And right now you're mentioning that the order book of 200 crores will be able to execute. I'm assuming the order book is just for project and not products also, right?
So this is including product. The current order book is including the product, because we have got some major orders from various products for various buyers, including government and private. So this is including that also. And it includes projection of from our existing repeat customers also.
Okay. So what is the bifurcation, if you could give from the current order book? How much is project and how much is product?
50% is product and 50% is project.
Okay. Okay. Understood. And what would be the margin profile in both project and product be like?
The margin profile will be slightly better than the last year, owing to economies of scale from a larger turnover, and expecting 1 or 2 percentage points higher margin this year.
Okay. Okay. Understood. And what is the order pipeline looking like? If we have any order pipeline?
The order pipeline, we are still only in April, May, and we are continuously going to be booking new orders, and they are going to spill over to the next financial year. So next financial year, the order booking in the current financial year, so far we have booked order of 44 crores already. So with this momentum, we are likely to book a large number of large orders, and which will spill over to the execution will spill over to the next financial year. So in the next financial year, we are expecting turnover of more than 300 crores.
Okay. Okay. Understood. And if you could give some color on the CapEx that we've done in FY26 and what we plan to do in FY27.
The CapEx in 26, we have done around 4 crores of CapEx we have done, which has been from our own internal accrual as well as bank loan. And there is a further CapEx ongoing of 2 crore, which is again, which the machineries are ready and are on the way actually to be set up, and buildings are also under construction. So all these have been through our own accruals and through bank loan that we had obtained last year. There is one CapEx that we are going to do from the IPO proceeds, and that also the equipment machinery has been finalized, and that will be purchased after some more due diligence on the part of the technical technical parameters of the machine. So after that will also come to our production facility. So that then our production will become 18,000 metric tons by September 2026.
Okay. So, the CapEx for this new machinery that we're going to do from IPO proceeds, that will happen in the financial year of 27, right? Or we've already done that CapEx?
So already CapEx is done. So already our production capacity currently is 12,000, and 3,000 metric ton the machinery already is on the way. So 15,000 will be there, and then 18,000, our capacity will become 18,000 by September 2026. And this last batch of machines will be purchased by the proceeds from IPO, which we had allocated for this.
Right. So that would amount up to what price?
Are you asking the value of the CapEx?
Yeah.
Yes. So the total CapEx since last year would be approximately 8 crores.
Okay.
Out of which only 1 crore is from the IPO proceeds.
Okay. So that is the total CapEx in FY26 and FY27 included, right?
Included, yes. For the part of our production capacity increment in our primary products, Gabions and nettings, etc., which are already being manufactured. Now we also have some plans which we are working on for new products. So that is materialized, that will become extra.
Okay. Understood. Yes, thank you so much. I'll join the queue if I have any more questions. Thank you.
Thank you. Participants who wish to ask questions may please press star and one. Our next question is from the line of Madhur Rathi with Countercyclical Investments. Please go ahead.
So, Mr. Sarda, I wanted to understand that out of our 115 crore revenue, what is the bifurcation between manufacturing and how much is the EPC part of the business?
It is approximately 50% each at this time.
You mean 60 crore each?
50%, so 50 service is, in fact, exactly if I have to say, it's around 54 crore is the service in this financial year.
Okay. Service is basically the installation and EPC is what we call service?
Yes, service we call the project execution is what we call service.
Okay. And the rest is our own manufacturing, and whatever we are manufacturing, we are basically consuming ourselves, or we are selling to outside external parties also?
Now, when we sell it directly to outside parties, we call it product sale. And when we consume it in our own projects, that becomes a service sale, because that is billed only after installation.
Understood. So basically 46% of 115 crore is external sales for us. External sale of products.
Yes, external sale of products, exactly.
Understood. Now, Mr. Sarda, what is our market share approximately in this Gabion industry? Gabion industry?
Gabion market share, I think, would be around 20% at the moment, 20 to 25%.
And who would be the other major players in this segment?
There are some factories, like there is a factory called Secure Matrix in Maharashtra. There is a company called TechFire. And there are some smaller players, but one or two major players are there who are competing with us.
Okay. So, all are unlisted. There's no major player like Afcons or L&T or anybody who is in the segment?
No, not in the manufacturing segment. The company names that you have taken, they are large construction companies. However, we do specialized work for these companies also. So our business of the service business comprises also of specialized structures that we build for companies like Afcons and L&T.
Understood. And Mr. Sarda, what is the water part of the business?
The water part basically is when we flood protection. So flood protection structures are required for and it's also called river training. So preventing flooding of rivers. That is the part. There is a project going on in Manipur, Impal River, which is flowing through the city. That flood protection work we are doing currently. So that is the water part.
Understood. And basically, is it fair to say that whatever service income is there, it is all tender business?
No, our service business, tender is for the government projects that we are able to win. Those are through tenders. But we have, as I said, private companies like Afcons, L&T, Delhi Buildcon, many companies like these for whom we do specialized work. So that provides us a stream of service which is not dependent upon tendering. But it's dependent upon our relationships with them and on our capabilities, which continue to support their own work.
So, Mr. Sarda, what was the reason for flattish revenues for past 3 years, FY24, 25, 26?
I guess it was the organizational capacities that needed to expand was not achieved during those years. Because as our projects were growing and as our business was growing, then the required resources it took time for us to build the required resources. So now we have built a lot of fleet of machineries. We have built our factories. We have put up a new factory in Assam. So we have now built up the required infrastructure to be able to drive the business that we need to do. We have similarly built our number of engineers that are required. So that has taken some time over the last few years. If you look before that, the couple of years before that, we have had good growth. We started from around 30 crore some 5 years back, then we went to 60 crore, then we went to 80, then we went to 100. And there has been some stagnation at this point. But coming year, we are looking at 200.
And what about the EBITDA margin that we can expect going forward from FY27 onward?
We are expecting a point or two percentage point, 1% or up to 2% increment in the coming years, owing to the economies of scale that we are going to generate in this year.
Understood. And what about our debt? I mean, after the IPO, it doesn't seem the debt has gone down. So in FY27, any plans to repay some part of the debt, and what is the interest cost outgo? Like it was 5 crore for FY26. So what is it expected to be for FY27?
Actually, our debt equity ratio, it has become very less now, around 0.7 is our debt equity ratio. And the finance cost this year has been 4.7 CR. And we expect it to be around this level only. So we don't expect huge increase in our finance costs.
Okay, understood.
So this margin improvement that we have seen from 12% in FY24 to 15% this year, is it majorly driven by the service portion increasing from 35% to 45% currently? Is that understanding correct?
Yeah, this year it has been driven by the increase in the services business, where we enjoy a higher margin compared with manufacturing. Although in the coming year, I have to just update you that we are going to become, the new expansion that we are doing is bringing advanced technology to our manufacturing, which is going to decrease our cost, and our manufacturing margin is going to improve in the coming years.
Right. So how much higher is service margin versus the manufacturing margin? If you could give me the difference between both of these.
The margin in services is approximately 10% higher than just in the manufacturing sale.
Got it. So it would be closer to 20% versus 10% for the product business?
Yeah, that's correct. Yes.
Got it. And now, sir, coming out to our working capital, sir, how is the working capital cycle for the product part of the business, and how is the working capital cycle for our service part of business? In that, if you could help us understand, do we get the 45-day MSME treatment for our private sector customers? Because I think in our and how is for the government customers?
As far as the 45 days treatment is concerned, still a lot of even the are not honoring that as much as it should be. There are few companies like Vedanta, the best companies, they are honoring that, but some of the other privates are not yet into that. But hopefully they will follow it. I mean, they are very fun improvement. And owing to that, we will be able to manage our product sale within 45 days turnover, working capital cycle.
Sir, how is the working capital for the product business that we sell to other people in the industry?
You are asking for comparison with other companies?
No, sir. For us, I'm asking how. So for the whatever products, Gabion products that we sell, what is the working capital cycle that we follow?
It's around 45 to 60 days.
45 to 50 days for the product, and what would be it for service?
For service is around 60 to 70 days.
60 to 70 days. But sir, if I look at our FY26 year end, our working capital was closer to 65 crores on a revenue of 110 crores. So that is not matching. That's why I was asking for the bifurcation, because it is like closer to 180 days, but 40, 45, 50 days for product and 65 days, 60 days for the service. It doesn't match. So where is this gap coming out from?
Actually, there is a work in progress in the inventory of around 15 crores. That is not that I'm not counting as part of the current. I mean, in my assessment of the number of days, because the project's work in progress. That is the 15 crore is the amount which basically is like an unbilled revenue. So that I'm not counting as part of the in the working capital cycle. And then there are cash 5 crore cash is there, and there is retention money 6 crore. There are items in the current assets which are not actually from the operation part, which can be so I'm giving you a modified figure actually.
Got it, sir. I think that clears my doubt. Sir, so how should we look at this industry going forward in terms of applications as well as the demand going forward? Maybe over the next 2 to 3 years, how should we look at this industry going forward?
This is a very high growth industry and it's a very promising industry because it brings technology to traditional to construction. Basically, our business is about bringing new technologies and making construction more cost effective and better quality wise. So that is the need of the hour at this time. And our specialized services like landslide stabilization, landslide protection mitigation, flood control, all these are also now very much in the awareness of the government, and the big push to achieve these goals. So it is a very pertinent business for this time.
Right. So just a final question from my end. Sir, what differentiates one Gabion supplier to the other? Because if I look at your website, some of these products are fairly commoditized, but some of them are very, I would say, some of them are specialized in nature or very application oriented. So if you could help us understand what differentiates us from our competitors, and what would be our right to win going forward across tenders and across the product segment?
So we are not just a manufacturer. We are an integrated solution provider. We have a very high level of, we have a high design expertise. We are on the forefront of technology. We are working with authorities on designs of structures, and our specialization means that we get preference over our competitors, and also our execution of project execution capability means that we are a one in-all solution provider. So once a customer joins with us, then they can be assured of a full end-to-end service and can be assured that their work is going to be completed on time and with quality, and which other manufacturers are not able to do. And plus, apart from the commoditized products, we also have specialized products like our 3D erosion control mat, which we are the sole manufacturer in India at this time. So we keep expanding our product portfolio also. So that way, of course, you have to be in the commodity section of the business also, because that will drive up the volume. And without that, you cannot have a reach of the market. So, but the business and the margins are earned through specialized services and specialized products.
Sir, so in the service segment, where we are more application oriented, is the work that we provide at the start of the EPC business, where how these Gabions will be placed, that will be dependent on so whatever time we submit to the clients. So if you could help us understand what is the flow, where do we exactly come in this EPC or the service business part?
Yes. So what happens is that these are basically these are protection structures. For example, if a road is being built, then you need to if there is a hill cutting there, then you need to stabilize that hill. So we come into the picture as soon as the need arises for the stabilization of a hill. Then our survey, our design team will take up the exercise of checking all the parameters, and then we'll suggest the design. We'll prepare a design which is technically capable of stabilizing the structure. Then from that, the BOQ will be derived about what materials will be required and what quantities, etc. And accordingly, then the order will be placed. And if the customer requires installation, we do the installation also. So, in fact, most customers ask us to do this installation ourselves because we have a large fleet of machinery. We have the expertise. We have the expert team which the customer needs to complete his work on time.
Got it. Sir, so sorry for extending. Sir, just one final question, sir. Out of this 200 crore order book, how much is coming from new, whatever projects, the 50%, the 100 crore projects, that is what we have currently, how much is coming from new projects versus older projects where there is need for additional safety requirements, and where we'll be going supplying these products? How much is from new and how much is from the older
In this 100 crore, approx 50% is from ongoing projects which were ongoing, let's say, halfway through last year. But they are still ongoing, they are not finished. And 50 crore are projects which are newish, just started or just about to start. So that is the bifurcation between in the order book, between the we can say substantially completed projects and relatively new projects.
So, Mr. Sharda, what is our total manufacturing capacity? If we operate at full capacity utilization, then what is the revenue we can generate from the manufacturing side of the business itself?
We are in the process of making a production capacity of 18,000 tons. So 18,000 tons will give us a turnover of around 180 crores.
180 crore only from the manufacturing, no service component.
No, yes. So that
okay.
We are in the process. So last year we started at 9,000. Then we became 12,000 currently. Then in our new machine, some of our new machineries are being installed, so that will make us 15,000. And by September will become 18,000, the capacity. That will translate to approximately 200 crore of just sale of product.
200 crores. And last year we did roughly 53 crore of manufacturing revenue, right?
Yeah.
But in the service part also, some of our manufacturing would have got captively consumed.
Mm-hmm. Yes, that's true.
So basically, what was the total manufacturing output in terms of tonnage in FY26?
Our was around 8,000 tons, and that was around so that will be around 75 crores of product value. So, so around 25 crore out of that was consumed in our own projects.
Understood. So now this 8,000 ton can by September the capacity will go up to 18,000 ton, and then ramp up. By when do you foresee us reaching 18,000 ton of volume?
We'll reach immediately because we are overflowing with orders, and if the machinery were there today, we would have been selling the full capacity. So we'll immediately, so let's say September, then, there is a rainy season, bit of a rainy season, the demand means the product sale, the construction activity is less. So you can say from October and then or November, we'll be selling full capacity.
Now, Mr. Sarda.
Yes.
Hello.
Yeah. Hello.
Yeah, so Mr. Sarda, since FY24, if we see our revenues are flattish, but the inventory has gone up from 13 crore to 35 crore, so like it's tripled, and receivables have doubled from 21 to 43 crore. Whereas the payables are basically flat at 22 crore versus 18 crore. So basically, despite revenues being flattish in past 2 years, the working capital has gone up dramatically, like it has more than doubled. So now going forward, what is the steady state working capital days in your business? Typically, how much inventory do we keep in terms of inventory days? What is the credit period that we offer to our customers? And what is the payables that we have? How much do we pay our suppliers? What is the payable days?
So this year we have a 15 crore work in progress in our project, which has been added to which has got added to the inventory. So that is the major reason why you are seeing inventory increase so much. And then there is a retention money 6 crore in the current, well, not in inventory, in the current asset. Okay, so when we are talking about the inventory, the major reason of the increment we are seeing is because there is a 15 crore work in progress of projects, which is basically unbilled revenue, it is because the work was substantially completed but not fully completed, so we couldn't bill it, or because the customer couldn't get around to do their measurements and certify our bids, so we could not bill that. So that is why the inventory is showing elevated. And then the trade receivables also is because our sale has in the last quarter we have had around 50 crores of sale last quarter. So that is why the receivable is showing at an elevated level at this time. But you can going forward into 2026, we are expecting the same level of trade receivables, because our quarterly turnover is expected to be on average 50 crores. So the trade receivables will be around 40 and yeah.
Okay, so basically now in FY27, the working capital will not increase despite the sales almost doubling.
Yeah, that's correct.
Okay. Now, Mr. Sarda, how many steps does our manufacturing process take? I mean, is it a 1 step, 2 step, like how many steps, and what is the starting raw material that we use?
See, there are a number of steps, and the raw materials that we use is GI wire, which is galvanized iron wire, and we use polymer granules. So with these two raw materials, we produce our products. Those are our major raw materials. And there are various steps in the production process, which first of all, is the coating of the wire. The wire has to be coated with polymer to make it corrosion resistant. And then there is weaving of the wire into a mesh. That is basically like forming a cloth of steel wire. And then there is another process in some of the products where there is a coating, not a coating, but a polymer mesh which is integrated into the steel wire mesh, which provides it erosion control capability. So that is one part of the process, one product line process. In another product, there is after the steel wire mesh is made, there is a process in which the base of the box is created, and then the panels are fitted on the boxes, and then packing and fabrication is done. So these are the steps in the Gabion boxes. And plus there are many different specifications that we are making. So there is a lot of management required in the production planning.
No, so I understood that.
Sorry to interrupt, Madhur. We request you to please return to the queue if you have any further questions. Thank you. Ladies and gentlemen, to ask a question, you may press star and one. We request that you please restrict yourselves to 2 questions only. For further questions, you may rejoin the queue. Our next question is from the line of Durgesh with Finmart Services. Please go ahead.
Yeah, thank you so much for the opportunity and good afternoon, everyone. Am I audible?
You are audible, sir. You may proceed.
Yeah, thank you. Yeah, so I have several questions actually. So first one is, your FY26 revenue grew by 29% almost on, and while EBITDA increased by over 70%. So what were the key drivers behind this strong operating leverage, and is this margin profile sustainable going forward in this year and the upcoming years as well?
Sorry, I couldn't hear you properly. I think you were asking about the H2, second half of the year?
Yeah, correct.
Yeah, so second half, we had a good period.
Yeah, EBITDA actually grew by 70%, no? So I'm asking that, so what were the key drivers behind this, the strong operating leverage? And is this margin profile is sustainable going forward in current FY27 and upcoming years as well? So that was my question actually.
Okay, so the margin profile going forward is sustainable. We have a business model which has been honed and developed over the last few years. We have our business is the driving force of our business is our technical capability, which our customers do not have within their own organization. So we bring in the expertise they require to complete their projects, so on time. And we have the execution capabilities to execute the parts of the project which they themselves are not specialized in. So with this business model, we are able to sustain the margins and increase our business. And infrastructure requirement is also now to make it sustainable and make it safer. So our work is protecting the infrastructure, like preventing landslides, preventing floods. So that this part of the this part of the infrastructure is now being recognized by the government also, and there is a thrust on it, which is not present earlier. So that is why we are able to sustain the margin and grow the business over the next many years.
Okay. Thank you, sir. And actually, I got it. And actually, this was mainly about the margin profile sustainability. And sir, what about the key drivers? Any specific or any special key drivers that you would like to mention?
I couldn't catch that. Sorry. I couldn't understand what you were saying. What is the question?
Yeah, my question is, so what were the key drivers specifically behind this strong operating leverage? Key drivers.
Key drivers. As I said, our business is, the key driver of our business is our design capability. With our design capability, we are able to provide a very high value add to our customers. We are able to save them money. We are able to, and also along with our design capability, our execution capability and our specialized products. We are manufacturing certain key products which are very essential to our customer. Is essential for them to be able to build the structure properly. And our execution capabilities also ensures that their work is completed on time. Otherwise, they will face many penalties from the authorities.
Okay, sir, thank you. And sir, the question regarding PAT. So in FY26, the revenue growth was almost modest at around 14%. And PAT grew by almost by 31%. So can the management please elaborate on the initiatives that led to this higher profitability growth PAT-wise?
Yeah, PAT was because, see, our PAT was, relatively modest last year, and also, so that's why increment looks big because it was relatively modest last year. But we are then looking to sustain this and grow this by another 1 or 2 percentage points in the next couple of years.
Okay. That's good to hear. And so, which business vertical of yours, that is manufacturing, trading, or services vertical, contributed the most to the revenue growth during FY26? And how do you see this mix evolving over the next couple of years as well, 2 to 3 years, say?
I think, yeah, your question is pertaining to our manufacturing and like where is the thrust area. So I would like to tell you that it is going hand in hand. So basically, because our manufacturing, a lot of the products, a lot of the services that we provide uses our own products. So they are going hand in hand. So we are, and that is also a key reason for our growth also, because we are able to.
Sorry to interrupt, sir. Actually, my question is regarding the growth contribution during FY26. As in, which of these verticals contributes highest to the growth? Manufacturing, trading, services vertical.
In 26, the services was the growth, mostly the growth, because the manufacturing, our capacity was already at a high utilization, and it took time for us. It took time, and this year it will translate. The product will also increase. The manufacturing.
Okay, and how do you see this mix evolving over the next couple of years? 3-4 years as well, 3 to 4 years upcoming.
Yes. So upcoming 3-4 years, our momentum of growth will keep growing, like 200, 300, 500 crores. We are going to go, and then we do aim to become big projects, big construction company, which can take big projects, 500 crore, 1,000 crore, like that, and all turnover. So from there we can go to become a key construction company in the country.
Okay. Last couple of questions, sir. So what percentage of the current order book is expected to be executed during FY27? Any specific numbers?
See, most of almost 90% will be completed this year only, because the order book now, the new projects we are getting, we are going to complete. We are now planning to complete all of them quickly. So, and the past orders will also complete, and we are continuously booking new orders also. So which will become our mainstay for the next financial year.
Okay. And
sorry to interrupt. We request you to please rejoin the queue for further questions.
Okay. Sure. I will come back in the queue. Thank you so much for the information. Thank you.
Our next question is from the line of Manan Jariwala, an individual investor. Please go ahead.
Congratulations on the good set of results. So I wanted to understand about the tax treatment that we're doing. So if I see the results, so we didn't charge any tax in the first half of the year, and charge the full year tax only in the second half. Whereas in the previous year we didn't charge any tax in the second half, that is half to FY25. So could you just clarify the tax treatment we are doing and the reason for this?
Okay, you're talking about the comparison, because the tax, you mean the income tax computation is done at the year end. So that's why it is shown at that time only. I mean, we could show it, but that is how the accounting normally is actually. The tax is shown only not in the first half year balance sheet. It is shown in the full year only. That is the treatment that auditors are giving for the income tax part.
Okay. And one more thing, could you clarify regarding the 300 crore revenue guidance that you Was that for the this running year, FY27, or for the next year, FY28?
Sorry, I couldn't understand that question. Can you repeat, please?
The 300 crore revenue guidance, which you gave earlier, was that for this year, FY27, or for the next year?
That was for 28.
FY28. Okay. I'll join back the queue. Thank you.
Thank you. Our next question is from the line of Madhur Rathi with Counter Cyclical Investments. Please go ahead.
Questions, sir.
Sir, if you could help us understand what is the impact of steel prices on our products, and have we taken any price hike during this year?
See, steel is a big cost center for us, and what we do to safeguard us from price fluctuations is by booking large orders with our customers and with our suppliers, and that ensures that they also have a continued business, because it is the manufacturing process is a continuous line for them, so they cannot stop their production once they are into it. It becomes very costly if they have to stop their production. So if they have a big customer giving a big large order, they will book it and then they will do that backward purchase. So that is how we do it. We book a large orders with them. So by the time, if there is a price fluctuation, we are able to again change our finished material prices. So that's how we insulate ourselves from the fluctuation.
Okay. And just one, sir, are there any export opportunities for our products, or that is too far-fetched right now?
No, there are lots of export opportunities. Actually, our capacity is our demand. We are not able to meet the demand, domestic demand with our capacity. As I said, we are increasing, we are doubling our capacity currently, and that also might not be able to suffice the domestic demand. So we will take a call how to go about catering to the export market, because there is an export market. For that, yeah, so it is in the pipeline, but currently our capacity is constrained for that.
Got it. Sir, do we also manufacture geotextiles, or geotextiles is a bought-out item for us?
Geotextiles is a bought-out item. Geotextile is we do not manufacture, but we do manufacture one type of geogrid. There are many types of geogrid. We manufacture one type of geogrid. The other types of geogrids are bought-out items, but geotextiles we are not manufacturing at this time.
Got it. Sir, just a final question. Sir, there is a company called SRM Contractors, and they are into slope stabilization work. Sir, so are we supplier? So would we be a supplier to them, or these guys who are like 1,000-2,000 crore company, they have in-house production capacity?
The SRM Contractors took over one company called Mekaferi, which was a manufacturer of these products. But that company's manufacturing is not going too well. So they are relying upon other suppliers, and we are a major supplier to SRM. And also, but at the same time, we are even competing with them in projects.
Okay. Got it, sir. That is from mine. Sir, just one.
Sir, so now in our manufacturing of external sales part of the revenue, do we have dealers and distributors, or we directly deal with the customers?
We directly deal with the customers. We do not believe in having a line of another line of people, because they will not be able to technically understand the requirements of the customer. So we have our own regional marketing team, which are who are qualified engineers, and they are able to cater to the requirements and guide the customer properly, and then that's how we add value to our business.
Understood, sir. And sir, just one last thing that you mentioned, if I understood correctly, that the increasing steel and the polymer prices should not have any impact on our margins. Is that understanding correct?
So they will have an impact, but we insulate ourselves by booking large quantities, so that at any given time we have a pipeline of supplies coming in at a at a rate which we have already considered in our sale prices. So that's how we insulate ourselves from this. I mean, for example, the Iran war time, the polymer prices doubled basically, but we had a good booking of quantities with our suppliers, so we did not have to bear the hit as much as otherwise.
Okay. So now this 200 crore revenue that we are expecting in FY27, that order book that is there, for that already the raw material has been booked at the same rate at which the order was taken.
No, that far we cannot go. Maximum we can go is up to 3 months of our sale for production.
No, so Mr. Sarda, now you are expecting operating margin to increase by, let's say, 1 to 2 percentage point this year. Now, that is only possible if we are able to pass on the drastic increase in steel and polymer prices. So now this 200 crore of order book that is already there. It is already behind us. So what I'm trying to understand that at current raw material prices, if we execute those 200 crore worth of orders, then will we be able to get 15-16% EBITDA margin?
So as far as the project orders that are concerned, that those we are, as I told you, that we are going to finish them quickly, so that we remain insulated with the fluctuation of prices. And as far as the product sale part is concerned, there is a scope for renegotiation of prices if they are drastic. For example, during the Iran war, we had to renegotiate prices with some of the customers. And customers also understand that, if something becomes infeasible or like force majeure conditions, even in contracts there are force majeure clauses. So that insulates us and we can renegotiate the prices. However, the major strategy for us is to execute quickly and to insulate ourselves from this kind of fluctuation.
Understood. And what is the average order execution period? Like, let's say we get an order today. So firstly, in terms of manufacturing, how much typically time it takes? And if there is a service component also, then how much further time it will take approximately?
The manufacturing part within 1 month. 1 month is a typical period in which we complete an order. But sometimes there are larger orders, then that can go on up to 3 months, 4 months also. And for project, it will take around 6 months to 9 months for execution. What we do is that we produce the materials that are required and ship it to the site. So we maintain a slightly higher level of inventory to control the costs, insulate ourselves from the fluctuation.
Okay, Mr. Sarda, thanks a lot. Best of luck.
Thank you.
Thank you. We have no further questions, ladies and gentlemen. I would now like to hand the conference over to Ms. Dhruvi for closing comments. Over to you, ma'am.
On behalf of Gabion Technologies India Limited and Equibridge Advisors, I would like to thank everyone for taking the time to join today's conference. Should you have any further queries, please feel free to connect with us at info@equibridgex.com.
Thank you. On behalf of Equibridge Advisors Private Limited, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.